Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. On June 1st, Vimal Kapoor, a longtime Honeywell executive, succeeded Darius Adamczyk as CEO, ensuring a smooth transition and reaffirming Honeywell's commitment to maintaining its leadership in sustainability and ESG. Some 60% of Honeywell's annual revenue is generated by technologies and solutions that drive ESG-oriented outcomes for customers, so the company is uniquely positioned to develop new breakthroughs to mitigate climate change from all angles. With us here today is Evan Van Hook, Honeywell's Chief Sustainability Officer, who's charged with helping the company execute against that vision. Honeywell is also a constituent of Nasdaq's flagship index, the Nasdaq 100. Evan, it is great to see you. Welcome back to Trade Talks.
Thanks so much.
And during Honeywell's recent Investor Day, the energy transition is the megatrend that's going to set Honeywell up for long-term growth. Tell us more about that.
Sure. We talk about energy transition, and that's really what it is. And this is sort of emerging in all different areas, from hydrogen to sustainable aviation fuel. But at its core, it's really driven very much by climate change because, of course, so much of the greenhouse gases that are emitted to the atmosphere relate to energy. So usually when people are talking about that energy transition, it's really that driver from climate change heading towards that decarbonized economy that we're hoping to see by 2050. So that's what's really the motivation there.
And Mr. Kapoor also laid out a commitment for Honeywell Sustainable Technology Solutions. This is a separate business unit and expects to achieve $1 billion in sales by 2026.
Yes, that's a real innovation powerhouse. In addition to our 60% of revenues, about 60% of our R&D investment is now in the environmental and safety space, much of which, again, is directed towards climate change. And STS, that's sort of that real mother lode of advanced technological development in things like sustainable aviation fuel, carbon capture and storage, green hydrogen. That's where our people that never missed a day of school work, and they're really developing some great stuff.
It's interesting, Honeywell has such a unique perspective when it comes to sustainable technologies. What strikes you about the current affairs and the overall corporate commitment to sustainability?
Right. Well, it is I think we have an interesting perspective because we started very early. We started back in 2004. And we sort of had a little bit of a luxury there because there wasn't this intensity of focus on it at that time. And so we sort of had a chance to sit back and think how we were going to do it. And we know we wanted to really first focus on our operations. And so we developed a very strong management system internally to start finding projects and eliminating our own emissions. We have eliminated about 93% of our carbon intensity since then, so that's a lot. And the reason I mention all that is one of Darius's big insights was we have to tie that to our products. So now I think the full story is we've been doing it for 2 decades. We've already knocked out 93%. We're going to knock out the rest. We know how to do this. We have the experience, we have the technologies, and we can help others do it as well.
So it sounds like you're able to measure your commitment to sustainability at this point.
Absolutely, absolutely. We measure it very carefully, and in fact, that's again that sort of internal operations and external product situation because we have been measuring it since 2004. We've had our data third-party verified for well over a decade now. But also increasingly, we're seeing a tremendous need in the market for ways to both capture the sustainability data accurately, maintain it, use it for diagnostic, but also do it efficiently. Right now, there's a whole lot of inefficiencies as people are trying to assemble these data. And so we see both in the data around it and the actual solutions, there's a lot of opportunity.
And besides joining us on Trade Talks in New York City, you are here for Reuters Energy Transition Summit. What are your peers saying about the progress that the energy industry is doing to mitigate these fossil fuel?
Right. It's a very, very hot topic of conversation. I do tend to see some of the same faces, and that conversation is sort of ongoing at a lot of different venues. A couple things I will say. as you know, Honeywell has launched this Environmental Sustainability Index, and that interviews 750 CSOs around the world. And the reason I mention that is that I'll have conversations, but I really like to see how is that reflected in the more comprehensive sort of evaluation of the industry. What we're seeing there and what, frankly, I'm seeing in conversations is optimism. And that's a really nice thing, and I don't know that that is, I would have heard that 5 years ago, but that optimism is driven by a couple things. First of all, the technologies are starting to emerge and really kind of be there. There's an awful lot that is ready now. We've knocked out 93%. That means we've done that with stuff that's available now. But the emerging technologies like the carbon capture and storage and the hydrogens, those are things that we can see as that they will be developing. I think probably some of the biggest challenges that we see are the infrastructure around the technology. You may be able to develop green hydrogen, but you got to be able to get that hydrogen where it needs to be used. You might be able to develop renewable energy, but you need to be able to store that energy and distribute it when it's needed. So right now there's a big, big focus on getting that infrastructure put in place so that we can utilize this technology.
Have you seen any pushback when it comes to ESG investment? As you know, climate change is a very hot topic. It's become very partisan as of late. How are you managing that?
Yeah, we have not, I will say. We have not seen the pushback from it. And when you think about it, manufacturing operations, a lot of it is based around the theory of it and the practices based around eliminating waste. Now, who would not want to run an operation that was running as efficiently as it possibly can, without waste, without creating potential for contamination or injury, and saving money doing that? Anybody would want that. And there is a real correlation between companies that perform very well in sustainability and in their economic performance. So when I say, people say, gee, is ESG impacting profitability? I would say, like, anybody who runs an operation would want to do it as efficiently as possible, and that's really the core to sustainability.
A lot of the sustainability milestones center around 2030 and 2050. There's some pretty aggressive objectives that are out there. Is the industry on track to achieve that?
That's another terrific question. The 2050, one of the things that's good to know, is that that is a real science-based target that the IPCC, which is affiliated with the UN, they said by 2050 we really need to be decarbonized to prevent some of the worst potential impacts of climate change. So that's kind of fixed by science. 2030 is a target, it comes up in a lot of different things, one of which is what are called NDCs that countries submit to the UN to say, hey, I want to be here to make sure that I'm on track. So there's kind of regulatory things that plug into those specific numbers. But, at the end of the day, we have to make progress. What Honeywell has always done is set a series of interim goals. We have never said, we've set the long-term goals, but we've never said we'll wait and hope we get there. We are now on our 5th goal, which will finish up this year. Then we do have a 2030 goal and a 2035 goal. And just recently, we are, I believe, the largest manufacturing company to be approved for what's called a Science-Based Targets Initiative goal. And so I think, we set those series of goals to know that we're on track. And generally speaking, I think yes. I think that companies take this very seriously. There's a lot of scrutiny, there is customer demand, shareholder demand, and you don't want to fail. So I think people are really taking it seriously.
All right, Evan, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.